So you have capital allowances and you have annual investment allowances. And what do these two things mean to you as a UK landlord that pays tax? Well, both save you tax, but which one saves you the most amount? Great question, because we need to demystify this confusion. And we pose this question to Jake Ills in this video. Mr. and Mrs. Google's son, Google Jr., he has asked the question, what are capital allowances and annual investment allowances, AIA, and how does that work in regards to your work?
Okay, so an annual investment allowance is a faster write-down of those allowances. So until March 2023 now, you're allowed to write down your allowances of up to £1 million in the first year against all of your profits. And that's pretty much it. So you get 100% write down of all of that. If you've made that profit and you can actually write it off straight away or write it down straight away in the first year. So the good thing to know about annual investment allowances, and I guess we've done this with one of your clients recently, Simon, is that they've made that capital investment, they've had an SPV, they just got into it, they're going to be at a loss in the first year. And what we've done is we've used the claim for the annual investment allowance to give them an even bigger loss. So the moment they become profitable, they can offset that loss straight away against any profits in the future. So it doesn't seem like a big deal because they're not really getting any cash, but actually they're really getting the cash when they really need it. So they don't write a check to the revenue. They actually just get a zero. The tax liability becomes zero or less than it would have been.
And funny enough, we did some analysis and I don't know whether it's that particular client, but we identified based on their plan of approach on how they're going to grow that business, it's going to be 4, maybe 5 years before the taxman gets 1 penny out of them, which is absolutely fantastic.
Yeah, and I think that's the interesting thing when you're making capital investments. Even if you're in an existing property business, then you've got good profits, then the annual investment is really good to write down and offset the tax liability really quickly. Yes. And then if you run it at a loss, then it's just being understanding where the value is and those allowances. The government have just extended the deadline for those annual investment allowances to 1 billion until March 2023 to further encourage capital investments in this sort of thing and in plants and in other capital investments. So.
Yeah.
It's all sounding good.
One question I've got though is there is a time frame, isn't there, in terms of the being able to claim the annual investment allowance. So you've got to buy a property. Let's imagine you bought a property on the 1st of January to make it really easy.
Yeah.
At what point would you need to have done the capital allowances report through you at Six Forward in order to get the AIA? Yeah,
it's in your first year of expenditure. So when you have to account for that, yeah.
Yeah, because if someone, let's talk about someone that had this property or has got service accommodation or commercial properties watching this show, and if they want to fill in that capital allowances form, the link's just below the video description, so go ahead and do that. But it doesn't mean just because they can't claim annual investment allowance, it doesn't mean they've lost capital allowance, does it? They just get a different rate.
Yeah, just get a different rate. There are 2 other rates there. So as you rightly said, Simon, there's the building services of very simply the stuff that's stuck on the walls. So and then there's the bits that are in the walls, which are commonly known as integral features. I'm sure some of my team will be cringing at some of my non-technical explanations, but in reality, you've got the main plan, which is written down at 18% a year, and you've got the special rate expenditure, which is written down at 6% a year. So the stuff in the walls, 6%, stuff on the walls, 18%.
And so broadly, what I guess we're saying, just to kind of bring it back to clients who may not be very familiar with capital allowances, that circa 40% you might be able to extract out of a let's call it residential property or property of some nature that might be, for example, furnished holiday let.
Yeah.
You're still going to get it. It might just take you a little bit longer because you have to almost pick at the value slowly over a number of years rather than have it all in that first year. So the fact that you might claim it after the first year because you weren't aware, now you want to claim it, you're not going to lose out on the overall value. It just means you won't get it in one slug. You'll get it in several amounts.
Yeah, the value is exactly the same and the relief is exactly the same. As you say, you can imagine a sort of a spike if you use annual investment allowances or imagine just a slowly decreasing gradient over a number of years if you don't use annual investment allowance.